Let's get a little bit more market perspective from someone that is in the space. Kevin Flanagan is WisdomTree head of fixed income strategy and joins us now. Kevin, great to have you on the show. Again, a lot of market volatility that we've been seeing essentially since the beginning of that Russian invasion of Ukraine. But of course, all eyes still on the Fed meeting, at least as far as this week is concerned. Is the expectation for you for 125 basis point rate hike?
Yeah, I mean, I think that's been pretty much well telegraphed by the Fed chairman a couple of weeks ago during his congressional testimony. So it would seem, I would think very unlikely that they would go against that and say go a half a point, because we're not really discussing whether or not the Fed's going to raise rates. It was always just by a matter of how much. And I think when Powell says he's inclined to, or I'm recommending a quarter point, I think that's what we're going to get tomorrow afternoon at 2 o'clock.
Yeah, and that's notable because the Fed chairman usually doesn't say outright ahead of a meeting, hey, here's exactly what we're going to do, but maybe he wants to introduce that certainty to markets. But I guess for people that are watching this and wondering, what the heck is a 0.25% of a point going to do to quell inflation? What say you?
Well, I mean, I think that's a great point. And I've been reading more and more about, concerns about stagflation and where we're going from here. And I always like to say, wait, let's tap the brakes a little bit. I mean, we're talking about raising the Fed funds rate from a zero interest rate policy and a $9 trillion balance sheet, which is a whole nother part of the story. So the Fed has a long, long runway to go before they would be entering restrictive territory with respect to the economy, let alone trying to combat inflation. And remember, there's not really much a central bank can do when you're talking about higher food or energy prices. I mean, I know in your previous segment, talking about crude coming down today, the Fed really has no control over that. What they hope to control is perhaps inflation expectations, and that it doesn't feed into a self-fulfilling prophecy that lasts much longer than what should normally be the case.
Right. So the point is not necessarily it's just 0.25% here. It's that's the beginning of a hiking cycle. So then tell us how many interest rate hikes you expect to see over the course of the remainder of this year, and whether or not you feel like the Fed can actually properly land this plane given all of the uncertainty we're seeing.
Well, I mean, Fed funds futures, right? They don't have the greatest track record, but it's what we all, I think, are guilty, myself included, of looking at. They pretty much have the Fed going at every meeting for the rest of this year. I think for now, the way that I look at it, because things can change quickly, is that I think they're going to front load. I think you get tomorrow, you get May, June, July, and they're also going to introduce, as I mentioned before, drawing down on their balance sheet. They could very well give us 7 rate increases for the rest of this year. But I think what's more of a given in our mind is that you're going to get this sort of front loading over the next 4 meetings. And then we move on from there. And remember, this is not just a 2022 phenomenon. This is more than likely going to continue into next year as well.
You mentioned the balance sheet. Again, that's the Fed's process of having added assets during the depths of the pandemic to message its markets, hey, look, we got you. The Fed now in the process of bringing that to a full stop. That has actually happened as of this week. Now, the commentary is whether or not the Fed will allow those asset purchases to actually shrink by letting assets roll off. How important is that going to be when you take a look to the press conference tomorrow afternoon? Or does the primary story really still concern its interest rate policy?
Well, obviously, the headline grabber is Fed raises rates, right? It's not going to be Fed winding down their balance sheet. I think for us in the financial markets, especially in the bond arena, the aspect to their balance sheet is very important. If you look at the Treasury yield curve, a lot of observers are saying, hey, the curve is so flat, it's going to get inverted. That's usually a signal for a recession going forward. I think this is where the Fed wants to use their balance sheet and have that come into play, and that what you will more than likely see is not just short-term rates rising, but as we saw yesterday, the 10-year Treasury yield moving up close to 2.15%. If you go back a little more than a week ago, that's almost a 50 basis point move to the upside from where we were. So there's going to be a lot of challenges, I think, for the bond market for the remainder of this year, and really no place to hide, except in our opinion, which would be Treasury floating rate notes.
Kevin, lastly, the cast of characters is very important when you talk about the Fed, and there are 5 nominees that are moving their way through the Senate with Biden appointees trying to fill the remainder of the vacancies there. Now, we got some news yesterday that Sarah Bloom Raskin, who would be tapped for the Fed Vice Chair for Supervision role, might not make it because of a centrist Democrat, that being Joe Manchin, coming out with a public statement saying that he won't support her. How important is that to the story for Fed policy later this year, and knowing that these could be very important people and policymakers if they do get confirmation?
Well, I mean, the Fed has operated shorthanded on a number of occasions throughout the years, and they have through this past cycle as well. So I think, one nominee perhaps not making it through the process, not that I want to diminish it by any stretch of the imagination, I don't think it's going to have much of a policy impact at all. That matter of fact, if the Fed were to get the remaining 3 or 4 nominees out there, you come very, very close then to filling what are the voting members of the committee. And remember, the voting members, and that also includes not just the New York Fed president, but the 4 other regional Fed presidents. So what's going before Congress now are considered more of the board of governors. They already have the presidents on board.
Yeah, absolutely. And worth noting, too, that the reason why Manchin throttled this is because of his concerns over her views on how the Fed should be monitoring climate change in the financial system. So the implications might be more on that policy side of things than, say, on the monetary policy side of things. But Kevin Flanagan, WisdomTree, head of fixed income strategy, thanks so much for stopping by this morning.